fine fettle. Let me now invite Sunil Subramaniam, the MD and CEO of Sundaram Mutual, on Markets at Lunch. Hi Sunil, good afternoon. This is Nentara. Plenty to talk about. But first up, I just want to observe all of you market participants seem to have shrugged off this tussle that we're seeing between the RBI and the government, which is now, out very much for everyone in the public. We saw the first signs of it on Monday, where the markets actually rose, and even today it's turning out to be non-event of sorts.
Absolutely. I think that generally there's always a conflict between the RBI and the government historically, right? The thing is always done behind closed doors. This time I think some leakage of some letters caused this unnecessary panic, but I don't think that fundamentally there is a problem with the government expressing to the RBI on what they would like to understand from RBI's action. As you know, if you look at the last few policies, right, the rate hikes have been surprising the market, in terms of one quarter when they were expecting it didn't happen, another quarter they're not expecting it happen. So I think the understanding, government seeking clarifications, understanding that. Second is that, government naturally is concerned about growth more than inflation, whereas Reserve Bank traditionally has always been having a greater focus on inflation over growth. So if you look at the perspectives here, the banking sector crisis, which was partly driven or enhanced by the RBI's NPA norms coming tougher into play, thereby drying up lending. So lending is a key for government revolve. So I think government's questions were around that, saying how tight are you going to tighten it? Is there? So I think there's a healthy debate which should have been going on at the back end, and I think just some leakage has led to this kind of a panic situation as if RBI is going to interfere. I think government has just clarified that they do not intend to interfere with the autonomy of the RBI, and I think that's very healthy news.
Right. Keeping it for the banking space, Mr. Subramanian, then you're positive on retail banks, but it's the PSU banks which are a bit concerning as far as your view is concerned. Could you tell us why is it that you're only preferring retail lenders with a private background and not PSUs?
The reason is that PSUs generally have not been very strong in the retail lending segment. They have been by and large corporate lenders, whether it's for SMEs, large corporates, historically. So while they have a retail deposit base on the lending side, they have more been focused on corporate lending. That's one reason. Second aspect to PSUs is the NPA situation, the provisions they are creating has resulted in the fact that though they have liquidity with them, they are kind of frozen on fresh lending, right? A little bit of a scare is there in terms of fresh lending. That's the second aspect. Third aspect is the RBI is putting the 12 banks on the monitoring program has also meant that decision making is slowed down. But fourth and probably most important is that we see that mergers within the public sector banks are an inevitable course. We've been saying that for quite some time, and the one that has happened is not the last one. So in buying a bank stock today, we are not yet clear where the merger process will end up with that bank. So we buy a better quality bank, it might turn worse with a merger with a poorer bank. If you buy a poor quality bank, you might end up with a better portfolio because it will get merged. So till the uncertainty is there, it's better to stay away, wait and see how the whole process does, and then we can enter that space. And the current valuations are in fact reflecting that. Whereas with retail lenders from the private banking space, right, if you notice that they have been very early in that places, they understand retail banking, they set up the proper risk management procedures to manage retail, and I think that private sector lenders, and it's not just banks, even private sector NBFCs are far better managed because their systems and processes on approving your loan, it's a book based, right? See, public sector banks still have a man-to-man, a personal relationship when it comes to, that's why we are more into corporate lending. When we are lending retail to large number of possessors, you need to have proper systems, right? How do you decide who do you lend to, not lend to, what kind of parameters, how much data, big data do you crunch to see what is the propensity for default. So I think the systems and processes of retail private banks are far better than that of public sector in entering such a wide space. So that's the reason we believe that while consumption is going to be a big driver, retail lending obviously has to support it, and it's the private banks and the retail NBFCs who are going to continue to enjoy a major market share in that space.
Okay, on that note, Mr. Subramaniam, thank you so much for taking time out and helping us understand about the themes and sectors that you are looking at in a volatile market and the ones that you prefer. Moving right on, look what's flashing on your screen. There's Dabur numbers as well. Profits have come in higher by 4%, 377.5 crore rupees. Sales higher by 8.5%, coming in at 2,185. Profits, we were expecting 398, they have delivered 377, so largely in line, just a tad below the estimate figure. Looking at sales, then we